Welcome back to Dukascopy TV and to another Targets in Focus. This is where we ask an expert to give us their predictions on a selection of currency pairs for a 1, 3 and 12-month period. Well, joining me on the line today is FX strategist at BBVA, Peter Frank. Peter, thanks for joining me today. Now, we know Mario Draghi has given yet another pessimistic or bleak outlook on the euro area economic activity, and this has pushed the euro down. What are your thoughts on the euro dollar looking ahead?
We're slightly bearish on the euro dollar still, looking ahead. Mostly the move has been very much in line with our forecast. We had it peaking just above 131 in recent weeks, and our expectations remain that we'll get a drop to 127 and below in the next week or so. And on a 1 month basis, probably going to see a drop below 125, either 1 to 2 months basis, and then over the term of the new year as well. So a drop under 125 is basically where we expect euro dollar to go.
Now, Greece has naturally had a noticeable effect on euro sterling of late. According to some analysts, the upcoming meeting of EU ministers is unlikely to deliver the 31.5 billion euros needed to aid the country. How do you see this pair faring over the coming weeks and months?
Certainly, Greece is a touchstone to a further downward move in euro sterling. There's no doubt about that. Any form of political problems within the Eurozone, whether it's between governments at Eurozone summit and other meetings, or it's nationally, such as problems within domestic coalitions as we've got in Greece at the moment. Anything like that is one of the first reactions of the market is to sell euro sterling, because the pound gains a bit of a safe haven against the euro. It's one of the first recipients of those types of net inflow of capital, and we're certainly very bullish the pound gaining ground against the euro. Our expectation was to drop to spot 78 in the next month, and probably it's going to go under that figure between 1 month and 3 months. So spot 78, a reasonable further period of outperformance for the pound is what we've got in our forecast. And one of the key reasons for that is that we do think that the political processes within the EU, surrounding not just Greece, but obviously Spain and other peripherals as well, is going to remain somewhat problematic. The longer term reason we're looking for euro sterling to fall is that even though we do expect that these political problems will be resolved, and we do think the ESM is going to be quite successful, and we do think that bailout will be agreed by Spain. However, even if you get all these positives stacked up in the next 1 to 2 months, you're left with the residual, which is widening macroeconomic sector underperformance against the UK. So we're looking at next year. Our own BBVA economists look for a recession in the Eurozone. Not a deep recession, but around -0.3 real growth seems to be what we're all looking at. But in the UK, you're going to be looking at growth of potentially 1% or towards 2%, depending upon the global outlook. But you're looking at moderate growth and quite a widening in the macro gap in favour of the UK outperforming the Eurozone. And that's already showing up in the labour market, in housing data as well, in consumer confidence data in the UK, which have all improved dramatically, while we're still seeing an aggregate deterioration across the Eurozone. So near-term politics should drive euro sterling lower. Near to medium term, it's going to be macro outperformance by the UK economy.
Finally, Peter, let's take a brief look at the Swedish krona. Has recent industrial data in Sweden affected your price predictions for the euro stocky?
Not really. I mean, we did get weak data today as far as the output numbers are concerned. The industrial production data was weaker than expected, but the orders number was stronger, so it's a bit of a mixed bag in Sweden. The general view there that we have is that basically industrial output probably hit the trough around August, September time, and that's definitely showed up in the data, and it also tracked a weakness in the PMIs. Since then, the most up-to-date data suggested a rebound. Particularly, that's driven by domestic demand, which has been very strong. We've had very strong retail sales and housing data in Sweden, and strong labour and wages data. So consumer confidence, domestic consumption data are all looking very, very robust. And we think that that's a key for a stronger Swedish krona, because that's what the hawks, which are the majority of the Riksbank board, are focusing on. That's when we get from the governor Ingves talk about fears that low rates are going to stimulate a big housing boom, big rising mortgages, and this undersupply of property. So these issues are something which is domestic based and is probably going to stop the Riksbank cutting rates further. That's the key driver, I think, for a lower euro stocky. This will be particularly aggressive if the global economy grows reasonably well, and certainly we noted the strength in China overnight in the data as one key factor defending that process. So we're looking for euro stocky to fall possibly under 8 within the next 6 months. In the next 1 to 3 months, a reasonable drop between 8.10 and 8.40 range.
Okay, thanks for that, Peter, and for joining me today. I'll be back on Monday for further exclusive interviews and the latest updates. But for now, enjoy your weekend, and I'll see you next week. Goodbye.